My name is Anchal Nigam and I am from Department of Management, School of Management Sciences, Lucknow. The topic which I have taken is capital markets from primary and secondary markets. This is a topic from MBA Finance Specialization and the subject is Financial Markets and Services. The objective of this topic is to make the students understand about the working of capital market and to make them understandable about different kinds of functioning that are being done by the primary and secondary markets. Another objective of this topic to be included in this subject is to make the students aware about different kinds of trends that are going on in capital market in today's scenario. The outcome, if I talk about for this topic, is that after studying this topic, the students will be able to have an idea about the analysis of capital market elements, and it is also useful for the marketers because the current scenario of the market, whether it is primary market or secondary market, it is very essential to have an inculcative idea about capital market. Moving on to my topic. First of all, we need to understand what is capital market. The term capital market refers to the institutional arrangements for facilitating the borrowing and lending of long-term funds that can be more than 1 year. For good capital market, if I need to talk about, it should have 3 kinds of constituents. If those 3 kinds of constituents are there, then there will be an efficiency in the trading purposes that are being taken by the marketers or the customers. Well, the first constituent, if I talk about, is availability of savings. Basically, the work of capital market is to provide a marketplace where there are the wealth savers and there are the institutional investors who are in need of medium or long term funds for proceeding any kind of project proposal. Capital market is a kind of market where buyers and sellers engage in trade of finance securities like bonds, stocks, derivatives, etc. It may be defined as an organized mechanism. As you can see, it is an organized mechanism for the transfer of financial resources from the investing parties. These parties can be public, general public, institutional investors or any kind of firm also. To the entrepreneurs, these entrepreneurs can be individual or institution as well, engaged in industry or commerce in the business. Basically, they are in need of capital funds and those can be raised by means of this capital market, whether they can go for primary market or secondary market. Moving towards our next topic, that is the features of capital market. If we want to understand the features of capital market, we should have an idea about the elements of capital market through which capital market shows a base to the investors as well as to the savers. First of all, we need to understand the first topic, that is it connects savers and entrepreneurial borrowers. How it connects? By means of providing a platform where the wealth savers and the entrepreneurial borrowers can do their business at an ease, and also by following the regulations, whether they are doing it in the primary market through government securities or they want to do it in the secondary market through stock exchanges that are available for them. The next point is it deals in medium long term investments. Most of the investments that are done in capital market are basically required to raise the medium or long term capital funds. Unlike the money market, which is there to fulfill the requirement of short term funds by means of call deposits, commercial papers, bills of exchange, etc. Third point is presence of intermediaries. If I talk about the presence of intermediaries, basically there are so many financial intermediaries to proceed the activities of trading. Some of the trading intermediaries are brokers, sub-brokers, commercial brokers, agents and their associates as well. Many of the private investment firms also are doing this kind of initially intermediation activities. The next point is capital market deals in both marketable and non-marketable securities. Marketable securities are those securities that cannot be transferred to anyone, like shares, debentures, etc. If I talk about non-marketable securities, basically they can be transferred, like term loans, term advances, etc. So, marketable securities are basically can be transferable, non-marketable securities cannot be transferable. Variety of investors is the next point in terms of features for capital market. If you can see the variety of investors, there are so many variety of investors who are included in the capital market, as we can also include the NRIs, because NRIs are the non-resident Indians and they have a lot of interest in doing the trading in our Indian securities market, especially as SEBI has regulated that the reduction 3 years to 1 year. So, now they can have the investments and the security returns in only 1 year. The lock-in period will be for 1 year only. If I talk about the over-the-counter market, this is also a very important part of capital market. Basically, if I talk about the over-the-counter market or the OTC market, it is a kind of off-exchange trading. Off-exchange trading can be done with the listed as well as unlisted securities. Now, moving on further, after understanding about the scenario of capital market and its different kinds of features, we need to understand that what are the types of capital market as a whole. If we talk about the types of capital market, it is classified in two forms. The first is primary market and the second is secondary market. Now, moving on towards it, if I talk about the primary market, we have public issue, rights issue, bonus issue and private placement methods through which we can do the allotment of securities or shares. If I talk about secondary market, which is also known as aftermarket, so it includes stock market and over the counter market. Basically, if I talk about the primary, now we have to understand about primary market. Primary market is basically a kind of market in which securities are issued for the very first time to the investors. This market is also known as new issue market, because it is a kind of market in which the public or the institution or any individual who wants to invest for the very first time, he or she can become the shareholder of that company. It is a kind of market in which equities are formed. Primary market is a very important part of the capital market, because a company that wants to raise capital can issue securities such as shares or bonds in the primary market and can raise capital funds easily. Most of the time, investors do not have an idea of where to go, and they do not have an interest to show in secondary market. At that moment, it is very good option to invest in primary market, because of the thing that most of the things like government securities, especially government securities, are backed by government and semi-government. In the primary market, as you can see, the transactions directly takes place between the company and the investors. The company do not have to go for to search any kind of platform for doing any kind of transaction. They can easily find out the investors, and those investors can invest their money in the primary market at a far raise. Moving towards our next slide, that is methods which is adopted in primary market to make the trading more easier. If we talk about the first method, it is the public issue. Well, basically the public issue is also known as initial public offering or IPO. It is the process of issuing the shares to the public for the very first time. If they want to have a kind of placement for shares, they can go for IPOs. IPOs are very much trendy these days in the primary market, and company wants to sell their securities at a bulk rate in these IPOs. The next method that is adopted in primary market is a private placement. Basically, the private placement is a kind of offering of shares to a very few selected investors. Not more, the people will not be able to get, the general public will be excluded from these IPOs or private placements. Only some of the supreme, as we can say, supreme investors will get an opportunity to have a private placement, and this can also be done through lottery or pro rata basis. Now, if I talk about the next method, that is rights issue or rights offer, it is done basically through a listed company for raising the capital by offering the shares to the existing shareholders. The company needs to invite the shareholders who are existing through prospectus. Basically, the advertisement is known as prospectus, and prospectus can be mentioned for giving the information to the existing shareholders for rights issue. If they will be ready to be a part of rights issue, because it is their right, because they are the shareholders, they can go for it. Otherwise, they can also let it go then if they do not want to get allotted, they can let it go, and accordingly that will be allowed or allotted to the general public to come across for purchasing those securities or shares. It is called the rights issue because of the reason that preemptive rights of shareholders of the company is there for asking the subscription, as I already said in the previous slide, before offering to the outsiders. That is why it is known as rights issue. Moving on towards the next method is offer for sale. Well, this method is taken up indirectly through an intermediary who buys whole lot of securities from the company, and the new securities are being offered to the general public. Their basic motto is to purchase those lot of securities, and after selling at that they will be getting the higher return from the public. Moving on towards the next slide, the topic after completing the primary market and its methods that was adopted. Now the next topic is secondary market. If I talk about secondary market, then secondary market is basically a kind of market in which the trading is done by means of previously issued or already available securities that takes place in the secondary market. These are not including the IPOs. Basically, these are a kind of after trade market. They are not including the IPOs, FPOs or government securities. Instead, they will include the various kinds of stock exchanges. Like some of the popular stock exchanges are New York Stock Exchange, Bombay Stock Exchange, National Stock Exchange, Nasdaq, and MCX, that is multi commodity derivatives, that can be done in the secondary market. The platform is being provided to the general public because they are being excluded from the primary market from purchasing the IPOs and FPOs. The securities are sold by existing investors to other investors who are in need of cash, because if they are in need of immediate cash, they need to understand about the trading procedures that are being undertaken in the secondary market as a whole. It is very important to have an idea about the stock exchange, the listings and the listed securities that are being undertaken in the secondary market. We know about Sensex, we know about Nifty 50, because of the reason that the probable securities or the probable companies are there to buying and selling purposes and to do trade in an effective manner. If I talk about our next slide, that is the methods that are being adopted in secondary market. First is over the counter or OTC market. Well, OTC market or over the counter market is also known as off exchange trading, as I already said in my previous slide. It is a form of decentralized trading of securities. The buyer and the seller will be on one platform and they will be there with the announcing of prices according to which they want to do their trading. Each and everything will be in a proper manner and in a regularized manner, but yeah, not that transparent as compared to the stock exchange market, because in a stock exchange market there is a kind of electronic platform and the computer intervening will be there, through which the securities prices can be known by the investors as well as by the financial intermediaries, and the intermediaries like agents or brokers will not be in a position to do any kind of malpractices to grab the opportunities of the public investors as a whole. If I talk about the next method in secondary market, that is dealer market. In the dealer market, the buyers and sellers do not gather at a common place physically like I said in OTC market. Dealer market is like a stock exchange market in which the people, as I already said, have a transformational platform through which they can have an idea about investing in different kinds of securities as well. It can be stock, it can be debenture, it can be derivative, it can be commodity or forex trading that can be done in dealer market. Dealer markets are more transparent as compared to the over the counter market of secondary market. Here it is a very valuable thing for all the students to know about the stock exchanges. Basically, the stock exchanges are organized and regulated markets for various securities that are being issued by the corporate sector and other institutions. Right now, our country has 23 approved stock exchanges all over the country. There are participants also like institutions, general public, companies and sometimes financial institutions also and private investment firms also. There are the types of speculators who are there to make the stock exchange more interesting. The first speculator party is bull. Bull is also known as tezi wala. It is known as tezi wala because of the reason that they are in expectation of price rise in the coming future, and when that future will come, they will be able to sell those securities which they had purchased in the past. These bull spectators are like a very much important for stock exchange market because they are the people who make the Sensex quite higher for the investors and make it quite profitable for the companies. If I talk about the next speculator, that is bear and also known as mandiwala. It is known as mandiwala because of the reason that they have an expectation that the price will go down, and unfortunately, but for there it is fortunate that the market will go down, and when they will go down, the market will go down, then the bear spectators will be able to purchase the securities at lower rates, and again they will have an idea about the companies will be in minus, but the bear will be in profit, and they will be able to have a higher return in that particular case. The next are stags. Stags are the cautious speculator. They are cautious speculators because of the reason that they want to have allotment in new companies, and they want to have allotment for the securities which have a kind of premium also. So, before paying the money, they can sell it and have the return or profit through that particular moment. These speculators are very wise and they do not have any kind of trading quality like bull or bear. They do not want to make the stock exchange market to be bullish or bearish, they just want to get the higher return from the market. The next is speculator is lame duck. Basically, the lame ducks are those which are in the business like bear. If the bear or the bear spectators are feeling the difficulties in having the money to be returned as per their commitment is concerned. So, they will be in a situation of struggling, and that is why they are known as lame duck. This is all about, we have talked the primary market and secondary market, and it is very important to understand the capital market as a whole. For that, we need to understand the primary and secondary market as a whole, because if the capital market elements are not clear to anyone, then they will not be able to trade, they will not be able to analyze the market properly, they will not be able to make profits if they are going it with a particular career in their future. So, for students and for everyone, it is very important to understand the theoretical base and foundation about the organized mechanism of capital market. Here, to make a gist of it, I have taken some of the basis for comparing the primary market and secondary market to give a recall to your mind about the capital market's two elements. If I talk about the meaning of primary market and secondary market, they are quite difficult with each other, quite different with each other. A platform that offers security for the very first time is the primary market, if I talk about the primary market. In secondary market, if I talk about, it is a market where investors trade already issued securities, which is also known as after trading market or share market also. As the next comparison basis, as you can see here, it is the new issue market and after market or share market for secondary market. The type of product, if I talk about for the basis of comparison between primary and secondary market, the primary market includes IPOs, that is initial public offering, and FPOs, that is follow on public offers. Because of this, the products are quite limited in primary market. Secondary market, if I talk about, there are so many products available for being available to trade, like shares, warrants, bonds, derivatives and many more, and it is also going in trend for the investors as well. Purchase type, all the purchases, if I talk about primary market, in this market happens directly, but in secondary market the issuer or the company which is raising the capital is not involved in the trading purposes, while the financial intermediaries will be involved. The frequency of selling in primary market is just once. The security can be sold to the investors just once in the market, while in the secondary market the investors and the intermediaries can buy and sell the shares as many times as they want to. If I talk about the parties involved in primary market, the company and the investors are involved in buying and selling the securities, while here in secondary market the investors buy and sell the securities among themselves only through the trading platform that has been provided, stock exchange. If I talk about the last basis of comparison, that is price, the company sells the shares to the investors at a particular fixed price. Both buy and selling side investors work towards finding the best price for the trading purposes. At last, thank you so much. Have a nice day.